On July 4th, the US government did something it has never done before. It handed one single company the keys to an entire generation of investors. That company is Robinhood. And that's only the start. Its prediction markets are exploding, people betting real money on the World Cup and major events. Its trading volumes just hit records. And cash is flooding into financial stocks, one of the best performing corners of the market right now, all of it landing on the same company at the same time. I've rarely seen this many things line up at once. So let me show you exactly why Robinhood is the perfect buy right now. But first, forget what you think you know about Robinhood. Forget the meme stock, the GameStop frenzy, the trading app your little brother uses. The company that started with one product now runs 11 separate business lines, each generating over $100 million a year. Options, crypto, retirement accounts, prediction markets, a wallet, its own blockchain. Robinhood isn't a trading app anymore. It's becoming the financial platform for an entire generation, and the market hasn't fully repriced it yet. Which brings us back to July 4th, because this is the catalyst almost no one is pricing in. The government just launched something called Trump accounts, tax-deferred retirement-style investment accounts for American children. Here's how they work. Every eligible child gets one. It grows tax-deferred for years, and the day they turn 18, it automatically rolls into a retirement account, locking in decades of invested money. Now, how the money itself is held by BNY Mellon, but the government needed someone to build the app families would actually use, and they tapped Robinhood. Think about what that means. To open one, to fund it, to track it, families download the Trump Accounts app, built by Robinhood. Robinhood now owns the front door to millions of American families' finances, and it paid nothing to acquire a single one of them. And look at the money already pouring in. The government is seeding every eligible baby with $1,000. With roughly 14 million babies eligible, that's up to $14 billion in federal money, flowing onto Robinhood's platform. And it's not just Washington. Michael Dell pledged $6.25 billion. Ray Dalio pledged more. And over 50 major companies are matching $1,000 for their own employees' children. Adoption is already staggering. Robinhood's CEO says 5.5 million children have signed up for accounts, out of 60 million eligible. Over the July 4th weekend alone, that triggered an instant $1.5 billion injection. Then it compounds. Families can add up to $5,000 a year. Max that out, and a single child has a $150,000 nest egg by the age of 30. Multiply that across millions of accounts, and you're looking at trillions of dollars in future assets, locked onto Robinhood's platform for decades. And here's what makes it even better. These are everyday families, younger, working, not wealthy. That is Robinhood's ideal customer. Normally, a company pays a fortune in marketing to win people like this. Robinhood is getting millions of them handed over for free. And the child's account is just the front door. Once a family is in the app, Robinhood can sell the parents everything else: a retirement account, its paid gold membership, crypto. That's where it really starts to pay off. The US government, by law, just handed Robinhood a direct pipeline to its ideal audience at zero cost. Now, here's why the timing is so sharp. The next big moment is already on the calendar. Robinhood reports its next earnings on July 29th after the close. And to see why that matters, rewind a few months to Q1's release. Back in April, the stock got hammered, down 13% in a single day. After a weak quarter, dragged down by a 47% drop in crypto revenue. Did we see the bottom, or just a temporary dip? In June, Robinhood gave us the answer. In an SEC filing, and the numbers set records. Options trading volume jumped 38% in a single month, and came in 110% above what the market expected. Its prediction markets, betting on real-world events, spiked 60%, blowing past expectations by 136%. Equity trading rose 27%, and even crypto, the exact thing that caused the April miss, roared back up 38% for the month. The stock's dip wasn't the story. This was. And here's the kicker. They hit these records while cutting 10% of their workforce, more revenue from fewer people. That's called operating leverage, and it's what turns rising sales into exploding profits. So the real question becomes, how much profit does a machine like this actually throw off? A lot, and it starts with Robinhood's rock-solid fundamentals. $5 billion in cash and zero debt. Its free cash flow, the actual cash left over after running the whole business, is projected to run at an elite 25% of revenue for years. Its return on invested capital, basically how efficiently it turns money into more money, is heading toward 30%. And because around 90% of Robinhood's costs are fixed, almost every new dollar of revenue falls straight to the bottom line. Put it all together, profits are projected to compound at 17% a year for the next decade. This isn't a fragile app, it's a fortress that scales. And that fortress sits behind a moat the market keeps underrating. Robinhood owns the one demographic everyone else ignored, young, active investors, just starting to build real wealth. That matters because we're at the front edge of a $120 trillion wealth transfer from older generations to younger ones. And Robinhood locks those users in early, with retirement accounts, gold credit cards, and now the Trump accounts. Its rivals can't follow. The big legacy brokers chase older, wealthier institutional clients, and have little interest in ever offering things like crypto or prediction markets. That leaves Robinhood with a near monopoly on the active youth market, offering zero commissions no startup can afford to match. Because Robinhood isn't standing still. It's launching new products faster than almost anyone in finance, and each one is a brand new way to make money. Take prediction markets. Robinhood now lets you trade on the outcome of real-world events, elections, the World Cup, major sporting moments. Every one of those trades earns Robinhood a fee. It's a completely new revenue stream, and it's the fastest growing part of the entire company, projected to grow 27% a year. Then there's AI. In late May, Robinhood launched agentic trading, where an AI can actually carry out trading strategies for you, automatically. Over 50,000 people signed up in just the first few weeks. Why does that matter? Because it keeps users inside the app trading more often. And Robinhood makes money every single time they do. More engagement, more trades, more revenue. The market noticed the stock jumped almost 42% in 3 weeks, while the broad market went nowhere. And it keeps coming. Robinhood launched its own blockchain on July 1st, rolled out US stocks that trade 24/7 in over 120 countries, and pushed into new markets like the UK and Canada. Every one of these is another toll booth on another highway of money. Now zoom out, because the market itself is shifting in Robinhood's favor. For the last few years, one trade ran the entire market, technology and AI. Those names led everything and got very expensive doing it. But that's now reversing. Big money is rotating out of pricey tech and into financial stocks. And it's not random. Financials are cheaper. They're riding a wave of deregulation, and the economy is holding up with no recession in sight. In just the last month, financial stocks outperformed tech by nearly 15 points. And Robinhood is a financial stock, sitting right in the path of all that incoming money. Then there's a second shift, and this one is an actual rule change. For over 20 years, anyone who wanted to actively day trade was forced to keep at least $25,000 in their account, known as the pattern day trader rule. This year, regulators officially scrapped it. Now the barrier is a small fraction of that, which means millions of smaller, younger traders, Robinhood's exact customer base, are suddenly free to trade as actively as they want. And here's the beautiful part. Robinhood gets paid on trading volume, not on the market going up. If stocks rip, people trade. If the market crashes and everyone panics, they trade even more. Robinhood wins on the way up, and it wins on the way down. Finally, the chart, and it's about as clean as it gets. Robinhood is trading around $118, right near its highs. and it pushed even higher the moment the Trump accounts launched. And this isn't a sudden spike. The stock has been quietly building a base for months, a sign of steady, durable buying, not a quick pop that fades. It's sitting well above its long-term trend, with momentum that's strong but not overheated. Still real room to run before it looks stretched. And right now it's pressing right up against a key breakout level. Clear that line and the next targets stack up fast. 123, 128, 130, and higher. So let's put it all together. A historic government catalyst, handing Robinhood an entire generation of new customers. Booming new products, prediction markets, AI trading. Record trading volumes, a market rotation blowing at its back, and a stock breaking out to new highs. It is genuinely rare to see this many things line up on one company at the same time. Now, I'm not here to tell you what to do with your money, and nothing in this video is financial advice. But when the catalysts, the fundamentals, and the chart all point the same direction at once, that's the kind of setup worth paying attention to. If this helped you see it more clearly, hit that like button. It's the signal that tells me to keep making these. And subscribe to Invest with Teddy, the channel where we break down investing, stocks, and market news. Thanks for watching. Stay tuned for the next video.